Silver has fallen 9% in a single week. It has lost the $60 area, and the gold to silver ratio has moved sharply higher. If you think this is just another bad week for precious metals, I think you're missing the bigger warning. Because the real test may not be silver itself. It may be the dollar. Welcome to the 2% Brief. Today we're looking at silver, gold to silver ratio, the dollar inflation, and why Thursday's US jobs report could be the key test of the week. And if you find this sort of information useful, please like this video, subscribe, and use hype if YouTube gives you that option. I'll keep this public video focused on the main story. The deeper weekly view goes into tomorrow's Inner Circle update on the 2% Brief Substack. A link in the pinned comment below and also in the description. Now let's take this in pieces. Start with silver. Silver closed at $58.94. That's down $5.91 on the week, or around 9%. Why does that matter? Because silver is the more emotional metal. Often runs harder when confidence is rising, but falls faster when traders question the next move. Silver did not just drift lower, it lost the $60 area. Above $60, people ask how high silver can go. Below $60, they ask, where does support come in? So the first question for the week ahead is simple. Can silver reclaim $60? If it can, this may still be a sharp correction. If it cannot, the market may treat the move as far more serious. There's another way to look at this. Gold to silver ratio. Last week, the ratio was around 64-1. This week, with gold at $4,072 and silver at $58.94, the ratio is around 69-1. That tells us silver's not just fallen. Silver has fallen relative to gold. Earlier in the year, the ratio had been compressing, which meant silver was catching up with gold. But this week, that moved the other way. The market shifted back towards gold over silver. But that does not mean the silver story is finished. But silver does have to prove itself again. Now look at gold. Closed at $4,072. That's down $84 on the week, or around 2%. So gold was weaker, but it wasn't hit like silver. But that matters also because gold is the steadier signal. Silver tells us about risk appetite. Gold tells us about trust. So far, gold has weakened, but it's not broken the big psychological line, $4,000. Did slightly during the week, but closed higher. If gold holds above $4,000, the wider precious metal story remains intact. But if it breaks below $4,000, silver's weakness starts to look more dangerous. And platinum also closed down around 2%. At $1,637. It confirms this was not only a silver move. There was broader pressure across precious metals, but silver took the heaviest hit. So this tells us we didn't have widespread precious metals panic. It was more selective. That brings us to the dollar. Dollar index stands at 101.36. That may not sound dramatic, but it's high enough to matter. A firmer dollar makes life harder for gold and silver. It also suggests markets may be moving back towards a stronger Fed, stronger dollar, tighter conditions story. So the question is not only whether silver can recover, the question is whether the dollar allows it to recover. That is why the dollar is now the test. The reason the dollar matters so much is inflation. The May PCE inflation number came in hotter than the market wanted. Headline PCE rose to 4.1% year on year. Core PCE moved up to 3.4%. The market wanted evidence that the Fed could relax. Instead, inflation is still sticky. First quarter GDP was also revised up from 1.6% to 2.1%, so the economy is not obviously falling apart. That creates a difficult setup. Sticky inflation, a firm dollar, and metals starting to wobble. This is where the week ahead matters. Tuesday brings US consumer confidence. Wednesday brings ADP employment and manufacturing PMI data. And Thursday brings the US employment report, what many people still think of as the non-farm payrolls. Because Friday is the observed July 4th holidays, that jobs report comes a day early. Thursday could be the key market day. If the labor market looks too strong, the dollar may stay firm and metals may remain under pressure. If the labor market starts to crack, the market may shift the story again. I'll look at that in detail in the Inner Circle briefing. Now, step back and look at the wider risk picture. Bitcoin closed down 4.6%. I say closed, it never closes, but last looking at that a few hours ago, it was standing at $60,500. Oil closed lower too, with Brent $72, WTI just above $69. But equities for the week were broadly unchanged on Friday. They did change for the week. The Dow at 51,876, the S&P 500 at 7,354, the Nasdaq at 25,297, and the FTSE 100 at 10,508. Not at all-time highs, but not far from them either. So this was not a full market panic. The pressure was concentrated. Silver's hit hard, Bitcoin weakened, oil closed lower. But gold did hold above $4,000 and equities did not collapse. So investors are not terrified, but they are becoming more selective. Now add the geopolitical risk. Oil was lower on the week, which normally helps the inflation story. But the weekend headline risk is not lower. Renewed tension around Iran and the Strait of Hormuz means the market cannot forget energy risk. Oil has given the market some relief for now, but geopolitics could still turn it back into an inflation problem. That matters because this market is moving through a chain. Silver's the headline, the dollar is the mechanism, inflation is the pressure, and the Fed is the response. If energy risk returns, the Fed's problem comes back. The dollar problem comes back, and gold and silver face another test. That is the chain. So my conclusion is simple. Silver's 9% fall is a warning, a serious one. The gold to silver ratio confirms that silver has lost ground against gold, and the dollar is now the test. This is not the moment for panic, it's the moment for discipline. And for the deeper version, including the more precise levels and what I'll be watching next, join the 2% brief on Substack. The Inner Circle update goes out tomorrow, and the link is in the description and pinned comment. Please like, subscribe, and hype if available this video, and share it with someone watching gold, silver, the dollar, or inflation. And before you go, please watch one of the videos now appearing on screen. If you want the bigger picture, watch one of those now. Thank you for watching, and I look forward to seeing your comments.